Good afternoon. My name is Masood Galsi here at Nasdaq headquarters and financial district of Manhattan. Joining me today is Jack Mankey from the tech sector. Welcome, Jack.
Thank you, Masood.
How's it going?
Good to be here.
So we're here to talk about the tech sector. Just reading the headlines and looking at what the markets are doing. Obviously, there's a lot of volatility. I personally believe that it has to do with a lot of that the Federal Reserve essentially tightening monetary policy. We saw probably the most aggressive monetary policy in the history of the United States, and now that we're experiencing the great unwind, there's been a lot of volatility in the sector. I probably agree with the statement that the tech sector's been hit the hardest, and perhaps for the same reason. So away from the obvious, just kind of drilling into some of the subsectors. Which subsectors of tech have been hit hardest? Which are outperformers?
Yeah, so obviously, kind of to your point, there has obviously been a lot of common macro headwinds that are kind of inescapable across all sectors. But tech has been such a crowded trade over the past few quarters. If you actually look at the performance during the first 3 quarters of this year, there has just been such sustained performance, or at least sustained gains within the tech sector. It was up 3% in the first quarter, 6.5% in the second quarter, and then another 8.5% in the third quarter. So you're bringing it to almost 20% for the first 3 quarters of the year. And like you said, there's almost kind of a great unwind because that trade has just been so crowded that now you're starting to see a lot of these macro events really start to hit hard in the sector. And now you're starting to see a lot of these earnings that are kind of driving a lot of the volatility. And you are starting to see sort of this rotation out of the kind of the high-flying growth names, a lot of frothy valuations within the tech sector. And you are starting to see a pretty dramatic pullback, at least for this month, as it really hasn't seen that amount of pullback really over the past few quarters.
Got it. Again, kind of drilling into some of the subsectors, any sectors that are subsectors that are standing out as underperformance?
Yeah, I mean, semiconductors really has always been the driving force for the sector over the past couple of years. That sector has probably been hit the hardest just because there's just so many companies in sort of one market. And there's obviously a lot of underlying factors just related to NAND pricing and DRAM prices, and that's really kind of driving a lot of the, or actually the lack of demand in the sector. So that's really kind of pulling back a lot of the high-flying names. You actually saw AMD actually down, I believe, 3% earlier today. At least I don't know where they are at now, but issuing weak guidance, and I think that's really what's driving a lot of these names lower. In addition, Texas Instruments had a pretty rough quarter, highlighting a weak demand for chips. So that's really, I think, going to be a kind of an underlying narrative, at least for the tech for semiconductors going forward.
So I guess the story is semicons are weak because of fundamentals and also with all the macro themes that are being played out. Any comment with respect to some of the FANG stocks, which obviously get a lot of attention and publicity?
Right. So you had obviously Netflix come out. They blew out estimates with their amount of subscriptions that were added both internationally and domestically. Microsoft just had a pretty significant quarter yesterday, and they are up about 4, 5, 6% today. So there is still a pretty healthy demand in the mega cap names, and you're obviously going to see a lot of other Alphabet reports after the close today. You have Apple next week, so that still kind of remains to be seen. But despite a lot of the rotation out of growth and into value for this month at least, it still seems to be that a lot of the mega cap names are still sustaining a lot of growth and still kind of beating estimates, at least for the time being. So I think that's really going to be once a lot of the other names like Facebook start to report. I think investors are really going to have to take a look at that entire group of companies reporting and really see how that is going to drive the fourth quarter trading.
Got it. So that's interesting, and that probably leads us to the next question, which is earnings. One of the investors' concern across the board is earnings weakening. We saw over the last 3 quarters, EPS jumped some 20% across the board. Revenues up 7-10%, mostly on the heels of tax cuts and deregulation. Looking at the tech sector, what are your thoughts with respect to earnings going forward, at least probably 2019 or 2020 maybe?
Yeah, I think maybe not even going out that much, but I think really this next quarter is going to be a really significant driving force in terms of how the sector is going to trade for the remaining of the year, because you are starting to see a sort of a institutional demand is a little bit weakening just given all the volatility. You're starting to see a lot of hedge funds close up, and I think that's really kind of being driven by performance.
That's right. How much outflows did we see in September?
Yeah, so we actually saw like $15 billion worth just in September alone. And that, for the third quarter, was outflows from hedge funds were about $5 billion or so, but it really kind of all concentrated in September. And there have been a lot of hedge funds in the news, like Criterion, Highfields, Tourbillon, that are shutting down. I believe it was a couple months ago that Omega is going to be turning into a family office. And going back to the institutional flows is starting to slow in mutual funds and ETFs and even passively managed funds. So there seems to be a lot of shift to the sidelines just for now, just given a lot of the volatility and a lot of the macro headwinds just with the rising interest rate environment. So I think corporate earnings are going to be really in focus in terms of how managers are going to kind of deploy a lot of that capital. If you actually look at some of the, maybe not even tech specific, but if you actually look at Verizon and AT&T, for example, Verizon had a great quarter. They're now trading at 18-year highs, but AT&T really missed some of the analyst expectations. Now they're trading at 6-year lows.
Yeah.
So you start to see a really huge disparity in some of the top names for telecom at least. So you could start to see a little bit of a divergence in some of the mega cap names, and then kind of filtering down into some of the other subsectors.
Just really quickly before we sign off, telecoms, that utilities have been performing well, consumer staples, some of the real estate names, even though they are income sectors and we're seeing rates rise, mostly on the heels of their defensive nature coming to the fore. Right. What's telecom been trading like?
Well, if we kind of like take a look at the entire TMT sector, the October's been a pretty pretty rough month overall for pretty much all the sectors. Tech specifically is down about 11%, but it's actually still up year to date. Telecom is, there has been a sort of this, just given the GICS reclassification, there's sort of been a shift in terms of, what is kind of now embedded in the telecom sector. But I think the biggest change, among investor sentiment has been this rotation into some more value-based names, into some more defensive names, to your point, like gold and utilities are sort of sustaining a lot of the inflows. So telecom is still pretty much a pretty good hotbed, I think, especially given some of the earnings like from Verizon.
Yep.
But I think just given how many down days we've seen this month, I think a lot of that rotation into value and out of growth is really going to kind of sustain itself. But we'll kind of see how a lot of these growth-based names within tech over the next couple of weeks is really going to see whether that narrative holds, for the rest of the year or not.
Great. Awesome. Thanks, Jack. Thank you for joining us. To hear more, business.nasdaq.com. Have a great day.